Okay, this video we're just going to cover the US dollar, Aussie dollar, US dollar pair. I just wanted to look at a few things because obviously we're breaking out to new highs at the moment, and there's been a lot of talk in it. This is a monthly chart of the Aussie dollar, US dollar pair. This is back in 2001, and obviously you can see we've run from a low of around 48.60. 47.75 to now we're at 103. 14. I think we actually reached 103.40. So big run. I'm just going to show you a couple of things on this chart, and just keeping in mind this pattern here, and just sort of looking over here, and just simple things in the market that I've been watching. I put this in my first newsletter and sort of thought that range there. Okay, that first range there. Sorry, I've just said that this has been obviously repeated again here. So that's one move in the market that's happened, and then thinking that possibly this is the period of consolidation here. So from here to perhaps here, and then basically I'm just saying that maybe we've done. No, that didn't work. Was that period there, but on a shorter time scale. So basically maybe we've consolidated, and now we're moving that next leg higher. So that leg. So that leg here, I'm just saying this potentially could do this, and if that was going to be the pattern, so obviously that takes us quite a bit higher. There was another thing on this. I'll just get rid of a couple of these things. A couple of things here is that looking at this range here, sort of is interesting where that lands, and I mean you could potentially move that down to this point, and run that from the top, and that might even be a top coming sooner. But the one thing I was looking at was that, and with the range completion up there, obviously it doesn't have to do that far, but it's interesting to sort of see where they align. One other thing that you want to notice is that this is it's called a rising wedge. So this pattern generally can be bearish because, like as you see from this one, rather that's a channel, it can break below. But it is interesting to sort of play around. But yeah, if that was to play out, then I mean certainly we could see a fall in the currency, but we're not. Sorry. Yeah, I mean, what if it does break low, then obviously you can play out ranges to the downside. So that's the Aussie dollar, US dollar. The last chart I wanted to quickly just look at was the our market. Obviously, I've sort of been expecting a bounce. We did that in the last video, showing that the range was extended. We'd done 125% of the monthly range, and we were just coming to an area where the market looked like it was overdone, and we're ready for a bounce. So what I'm expecting now is the swings, and I always say that you look at your swing chart, and then you want to find a higher swing low to actually buy the market. So if this was the falls here, then this would be the higher swing, and that would be your indicator to generally go long and a trend change to happen. I'm not expecting the trend change to occur right away, and we might take a period of consolidation such as this and go sideways for a while into later in the year before we obviously complete a range higher. We have sort of done a move higher. There's a couple of things that obviously need to be considered. We sort of are reaching an area of resistance, and I do expect any sort of swing low. So should we say move down at all, and create a higher swing low, that will be a point where I'll be potentially buying the market if it can turn higher, and then we will look for a range up. Obviously depending on the range, could be any one of those two, and then basically just see if the market can continue to keep moving higher, and up to the 5,000 level by the end of the year. So that's just my thoughts. I mean, they change all the time in the market. Always, you've got to adapt. We'll be coming into April, so the new range will need to be done. Obviously, this month's range was completed to over 100%, 125% from the highs in March to the lows. So we will now see when we start in April, and potentially, if we do stick within 25. Sorry, the phone rang. So yeah, I do think that into April, if we have the range down, if it's within 25% of the monthly range, we'll get a safer long, potentially. If not, and we fall below, then it could be a range to the downside. But I'll cover that in my newsletter on Friday, and we'll talk more then.